So to wrap up this week's profit results, I spoke to June Bailu, lead portfolio manager at Tribeca Investment Partners, a little earlier, and we started by chatting about that incredible result from Nvidia.
Oh, absolutely. It's an incredible result. There's no doubt that analysts' expectations was phenomenal, and yet they managed to beat on every metrics. And it does goes to show this AI boom is here, and it could be just at the tipping point of AI boom. It does drive a lot of expectations of how can we profit from this, and where else can we go in AI, particularly here in Australia. Hence why we're seeing quite a lot of positivity across the whole tech sector.
Yeah, a lot of tech stocks today are obviously up,
Absolutely.
but they've been up pretty strongly, really, for the past 12 months or so, as this artificial intelligence has really started to take off.
Yeah, that's right. So that's actually a really exciting part of the share market now. And then you actually see it filter through a lot of other sectors as well. So the likes of Goodman Group, you think that's a property trust company, but yet now it's got a huge growth pipeline across the data center, where you are seeing huge growth and demand because of the AI, usage of cloud computing. We saw NextDC is doing incredibly well, and a couple of others. Unfortunately, we're already seeing, Altium, which does play into that AI space, now being sort of taken private. So, yeah, so our sector for that kind of exposure is shrinking, but hopefully we'll still manage to find some of them with that kind of exposure.
We mentioned takeovers. There was another one approved this week, ANZ and Suncorp. And a couple of weeks ago, Santos and Woodside, that deal potentially fell apart. But how busy is the merger and acquisition market right now?
Oh, it's incredibly busy. It's almost every second day we're hearing a company being taken private. Remember, we had Seven Group wanting to buy Boral. We heard CSR now being bid for by the French business at pretty good a premium. And then we heard Altium being bought out by the Japanese companies. And then prior to that, there's a couple of just in the last couple of months, we have up to 5 very smaller companies being taken out private across various sectors. So it is definitely heating up. Why is it heating up? Because we have always previously said that listed equity is cheap. And now that with the interest rate outlook very stable, we will have this sense of urgency of trying to take off those cheap assets.
Now, a standout performer this profit season, Satire, the luxury fashion retail platform. What's been so good about them?
Look, I think it's been good is that it is a very fast-growing business that is on a global scale, hence huge addressable market, similar to the likes of Farfetch, but make a lot more money. That's the core. It makes a lot of money, great margin, and a great balance sheet. And what's also very exciting, it's actually not that well known just because how fast it's been growing. And suddenly with this blowout report result, the investors really rewarded with the share price performance, and that's not. What's more is that there's more to go because they just about to launch in China, and that is probably one of the largest markets where this consumer demand for luxury goods is phenomenal. So and that's going to take place in the next few weeks. So it's going to be very large for the business.
Yeah, I guess the interesting thing about it is with cost of living, there's a lot of talk saying retailers aren't doing very well, but at the luxury end of the market, sales seem particularly strong.
Yeah, absolutely. So luxury end of market, consumer willing to spend, but they want to feel value for money. So, if it's a luxury brand that at a discounted price, absolutely there will be consumers. So we are absolutely seeing the strength across that end.
Now, another big company this week was Qantas. Underlying profit, 1.24 billion, bit of a share buyback. Is there still a lot of upside there for the aviation sector? Or?
Look, it's actually harder to see. It was a great result. They've done a great job. But on the call, the management did say they're going to return to a normalized seasonality, which is 60% earnings in the first half and 40% in the second half. Now, that shocked the market a little bit because that implies about 7% earnings downgrade of people's expectations. Heading into this result, everyone was expecting a great upgrade, great result and upgrade. It didn't happen, so we saw share fell somewhat. Now, we have heard from many airlines now around the world, all pointing to a weaker, 6 month to 12 month. Things are getting tougher. Particularly, remember, Qantas are spending a lot of capex. They're pushing it out a little bit, but it's going to head into a tougher environment for sure.
Now, we talked Nvidia and tech at the start, but WiseTech, the logistics company, reported this week as well. I think its shares jumped basically to a record high. Is there still a lot of potential there?
Look, this is a company that people often talked about as the most expensive tech company.
It's almost $90.
Exactly, but that's clearly not compared to Nvidia, And so I guess the hard thing for investors for a company like WiseTech, it's always been expensive, and where does it stop in terms of the multiple? What I can tell you is that there was a lot of expectation into the result, and they've done very well. Obviously this company plays into logistics space, and because of disruption across the Red Sea, so there was some worry that company might have a bit of slowdown in things, and it didn't. So it did demonstrate that they're building this global logistic business, and they just won some of big contracts. So now they control, or they have exclusive contract with 12 of the top 25, freight forwarders around the world. It's a big business. So I do think it's a very strong business, and it's global. It'll be so much bigger in the next few years.
And then just finally, we also got BHP, Rio and Fortescue this week. Seems like iron ore prices held up pretty well despite the Chinese economy struggling a bit over the past sort of 12 months.
It is, isn't it? It's quite interesting. Even the economy is doing tough, but iron ore price being very strong. Fortescue is a report a fantastic result. And most of the larger miners, they have talked to higher capex that they need to spend. So results been fantastic. And currently with Chinese economy come back online after the Chinese New Year, actually the iron ore prices is even holding firmer at the moment.
Junbei Liu from Tribeca Investment Partners, thanks so much for coming on the program.
Thank you for having me.